So to easily plot my previous day high, previous day low, previous week high, previous week low, right? I use this indicator, Spaceman BTC, right? You can come to Spaceman, just key level Spaceman BTC. So I use it to plot my previous. So these are my settings. So you can actually set it to suit your style. These are my inputs. I remove the by default. You when you put your own by default, you might not be seeing it like these are my own is showing here because I because of the color and the customizations I've done. Right. Maybe when you put your own, you might be seeing a lot of things. It's not left for you to customize it to suit what you want and remove the things you don't need, right? So I remove like, for instance, let's say I'm using the shorthand. If I remove for this previous month, now I'm using the shorthand for all of them, right? Now let's say if I remove the shorthand for the previous month, right? You are going to, if you look at the chart, you're going to see that it wrote it clearly, previous month high, right? But I always want to make sure that I have fewer things on my chart so that I can actually focus on what price is showing me. So I always like to use the shorthand form so you can actually customize it to suit what you want or what you like, right? So these are my inputs or these are my inputs. Now the same thing when it comes to style is where you change maybe label. So visibility, I left it by on default. Now when you now have this, what it helps you to do is that, right, especially by the time you start writing, by the time you start doing storyline, right? One of the ways you build bias, I don't want to go into storyline, but one of the ways you build bias is when price takes out, is either you build bias by price rejecting from a key level, or when candles or when price sweeps a liquidity, which was exactly what happened here, right? This is a previous day high. This is the high of Tuesday. This high of Tuesday, price swept it, right? So the main price sweep this high of Tuesday. Technically, the most or the place you expect price to come is here. So that means on Tuesday, right? Oh, sorry, the Wednesday candle swept Tuesday. So that means on Thursday, on Thursday, all your attention or everything you just want to do in market is to sell because you know technically this is where price coming out. The price comes to this level before you might now start thinking of changing your bias, right? So that is a previous day high, which is a liquidity point. Now the same thing happens for the previous. Okay, let me go to, I think it happened on JPY. Happened on JPY recently. Previous week high. Now looking at JPY, think I've let me change this setting. Think I want to take the shorthand. Previous week. So looking at GPP JPY, see that price swept the previous week high, which is a liquidity point in the market. So technically, this is where I'm expecting price to come. All right, this is technically where I'm expecting at least price to come before maybe we might now see buys because this is a key level here, right? So and since this is a liquidity before a key level makes the key level more valid, right? So that is just what I'm looking at for GPY for the week because price has taken out a week, which is a liquidity point in the market. Right, the same thing happens before price also take out the previous week. Price first of all take out the previous month. And like I said, for you to know that is a sweep of liquidity, right? Once price take out that high, right, price will always close below it. Had it been that price after taking out this still has a body above the, it's not a sweep of liquidity. For it to be a sweep of liquidity, right? It needs to close, it needs to close below, right? So once you close below, it gives you more confidence, right? For instance, this is what happened a week before this week, right? What did price do? Price take out the previous month high. Not only that, it took out the previous month high, it took out other week highs before taking out the previous month high, right? And closed below them, right? So this might give you an intel like if you're on GJ this week, you know that there was more of sales than the buys, right? So which is what that move actually cost, right? There was more of sales than the with this one. Share studio you there. Then we have the trend line liquidity, right? So these guys act as magnet. We have the double tops and the double bottom. So now let me see if I can be able to. Let me just explain double tops and double bottom before. So when you have equal tops, right? Okay, sorry, let me use this other two. Let me use this other two. Uh, and when you have something like this on the chart, right? This is a bottom. When you have two bottoms, right? Technically, they might not be at the maybe at the exact point, but it's assumed that they have a in terms of zone. When it comes to key level is always exact pricing, right? But when it comes to things like order block and the rest, you look at zone of or area of interest. So when the same thing happens when it comes to the double tops or double bottoms. So it might not be both of them might not be exactly at the same price, but like they are in the same zone, right? So something like this, when you have something like this, you just know that this is a liquidity point in the market. So if you're able to see a key level or a point of interest below it, so you expect that when price wants to move, price will first of all clear this liquidity. If price clears the liquidity, you kiss this place before the move we start making sense, right? So I think there is one that happened recently on USD card. USD card. That should be last week or so. Just believe should be last week or so. Okay, though price hasn't actually taken it up, but we have like so this a bottom, this is another bottom. So these guys actually, even though the first move of price actually tries to do a sweep of liquidity, but now this is not a for me. I will not take this as a sweep of liquidity because this low is still standing. And remember, this low is Asian low, right? This low is Asian low. So this low is still standing. You see that this particular move did not actually take out this low, rather it reacted from this key level. So that means in this zone, for me, I have a double bottom. So what I'm expecting is that the next move of price will be to clear this low, right? Maybe after clearing this low, though I don't like this kind of rejection. I don't like this kind of rejection. But maybe if you change this to M30, you can be able to see something, right? We have a key level where price can actually react from. The other price use this key level or use this key level, right? Or you use this open and close as well, but might be looking at this. So, but these are liquidity point that price will clear, needs to clear before price we move. Maybe the more you go down to a lower time frame, the more you see it more clearly. Now, as it happens for the top, the same as it happens for the bottom, the same way it happens for the top. So you just need to pay attention to it. Then we have the swing highs and the swing lows. So technically, I've covered this why explaining the IRL and the ERL. So when we are looking at the swing high and swing low, we are looking at okay. Now we have what we call trend and we have what we call swing, right? When we say trend, we are looking at the primary direction of the market, right? So market can be trending upwards or downwards. But when we are looking at swing, we are just looking at the temporary movement of price in a certain direction, right? So the temporary movement of price in a certain direction gives you what we call swing. Now, combination of various swings now gives you trend, right? Combination of various swings gives you trend, right? Combination of various swings gives you trend. So now when we are now looking at if you are now looking at the swing highs and swing low, sorry. We are looking at the swing highs and swing low. Like I said, the liquidity points in the market, even though I've covered them in the IRL and the ERL, right? So the swing highs and the swing low, this is a low, this is a low, this is a low, this is a high, this is a, so there are liquidity points in the market. Now, depending on the intention of price, or maybe when you go into some persons call it advanced market structure and red, but let's just forget about names, right? So depending on the intention of price, all these things are liquidity points in the market. All right. And for this bullish profile, this is your IRL. This is also your swing high, right? Which is your external range liquidity. This is your swing low, which is your internal range liquidity. So this is just another way of trying to explain the internal range and the external range liquidity. So you need to pay attention to them. Then the next is inducement. Now, this is very, very important. So inducements is like a trick. Inducement is like a trick, especially for people that like jumping into a trend early to start buying or start selling early, right? So inducement is like a trick. Now, but how do you know that price is making an inducement, right? Now, for instance, let's look at this structure, right? Let's look at this structure. Okay, let me start with sweep of liquidity first. Need to have sweep of liquidity. Right after sweep. Now this point is the inducement. Now looking at the context, the first thing price is that it swept liquidity, right? And after the sweep of liquidity, price breaks structure. Right now, the moment price breaks structure and try doing as if to say it's pulling back. Maybe some person might have seen a video or whatever and start people that we now want to start buying early. But now for you to know that this is an inducement, right? This, for all things being equal, right? When you look at profile, you see that if price is making bullish profile, it will keep breaking the tops, right? That is for a perfect or an ideal bullish profile for all things being equal. But now, for you to know that there's an abnormality or there's something is wrong, this move that's supposed to break this high did not break it. The moment that this move did not break this high and price started coming back, just know that this is an inducement. This is an inducement. So that means those that started buying here, their stop loss might be somewhere around here or whatever. So the price is going to use them as liquidity, right? Because they are they are just buying, maybe they are buying without their impatience or whatever. So what price you do is that if you come back, take out this inducement and the remove will start. Also, I'll use this inducement to also explain another thing, which is the last point I said. I said that the first pullback after a break of structure, right? Most of the time, the first pullback after a break of structure is a liquidity point in the market. Now, structurally, this is a break of structure. After that break of structure, you see this first pullback, right? So most of the time, most of us we try to go with this first pullback, right? So most of the time, so that means when I say, well, let me just say some of the time. Let me not say most of the time because you won't always see it like you won't always be seeing textbook example in the market. So some of the time, right? So since this is a liquidity point in the market, then you expect price to pull back, take it out, and the remove will happen. All right, so let me just see if I can get any of this from the chart. Yeah, I think there is inducement. Okay, and also, right before I go to the chart, now this inducement can actually come in various forms, right? You can actually see it as a single candle. For instance, if this is if this is a candle, right? If this is a candle, right? So it can come in various ways. It's just for you to understand and know how to interpret it. Now, for all things being equal, right? For all things being equal, based on how price is delivered, this current candle is supposed to close above this other the candle that's finished forming. For all things being equal, based on how price is being delivered. But the moment you see that this current candle did not close above this, it's just within the range. Because when we are talking about range, we are talking about the high. Once you see that it's within this range of this candle, just know that this is an inducement. As long as it did not close above, you just know that it's inducement. I think one of the move I had on SAU on Friday was actually using this single candle inducement. All right, so let's look at SAU. Right, so um, right. So I'm sorry that we've not done key level, but I just want to use it and explain. Now, the moment price break this level, right? Because I know that this is a key level I'm supposed to use for sale, but the price I disrespect it. I will not be using it for a buy. And also the impulsive nature of the disrespect makes me to know that okay, I'll be buying. But now I won't just buy because I always want to make sure that I see liquidity. Then maybe if I'm on the H1, I won't actually see the liquidity clearly. But going down to lower time frame, I was able to spot inducement. So the moment I saw this inducement, I had more confidence to pull my trigger. Now this is the range of this candle. This is the range of this candle. Now, if you check, you see that this after this candle finish from, because this is actually the candle that lead to this break of structure, right? Like I said, the first pullback after the break of structure, because this is a 15 minute, you have 15 minutes, right? We are not trying to use one, like I said, it can come in various forms. So this is the first move after the break of structure. And this move, you see that this candle, for all things being equal, is supposed to at least either break this top, maybe either break this top with wick or even with body, but you see that it's just within the range. Maybe if you go down to something like 5 minutes, 3 minutes, or whatever, you now be able to see the bigger picture of everything, right? So this inducement. So the moment I saw the inducement, I was now confident to pick the buy entry. So this is a single candle inducement. All right, so let me just. This is another inducement here. This is another inducement movement. Even though price didn't actually take it out as expected, right? This initial move here supposed to break this level completely. Like this initial move is supposed to break this level. Right? But it did not break this level and started coming down. So by all things being equal, price supposed to clear this low, but price did not clear this low now. But rather, what price did is that it's introduced another liquidity. So this is not like now like a double bottom. So that means this might be a likely zone to watch out. Maybe if price starts descending, so this might be a likely zone to watch out for a buy entry, right? But this move is an inducement. Reason being that it did not break this high and started coming down. So this is more like a fake out move, right? For those who are FOMO in, right? I'm trying to see if I can see a clear inducement. Let me go to JPY. Okay, let me check G. Check G. Nice. All right, so look at this move here. Look at this move here. This move here. This is an inducement. This is an inducement. Because for all things being equal, this move supposed to take out this high. Supposed to take out this high, but now you see what he did. He did not take out the high and he started coming down. As it's coming down, just know that this is now a liquidity point in the market. Right? Then you now ask yourself, sorry. This is not a liquidity point in the market. So it's now left for you to know, okay, what is the nearest point of interest or key level to it, which is this. And the moment price take it out, price hit the key level and was forcefully rejected. And the moment that happened, you see the massive buys that came in. Right? You see the massive buy that came in. So the people who are impatient or the people who want to buy early, right? They were caught in this move and price drop back to do the main thing. All right, so I believe that is clear. Any question? Any question or conviction? 4 hour last week. 4 hour last week. 4H last week. What happened to 4H last week, G? This is Thursday. Okay, this is the current week. Okay, I think what you were okay, what we are saying is inducement, all right? So this is another inducement here. This is another inducement here. So this move we are supposed to is supposed to take out this high, right? Or it's supposed to either take out this or at least take out the structure. Like if you change this online chart, you're going to see that this is the structural high. But now it didn't do that. So and it started coming down. So that means once you see that, okay, price did not do what it's supposed to do and it's coming down. Because most of the time, you won't actually when price is forming, right? Until maybe when price is forming, it might not actually be clear until maybe price started, like most of the time price started reversing. That is why when you now look clearly, you now know that okay, that is inducement. So price uses key level for move, right? Sweep this liquidity, and for you to know that price really has intention to move. The moment he hit this key level, it was massively rejected. And also, this guy closing bullish is like a double confirmation. You just pull your trigger and move. All right, so I believe we are cool. I believe we are cool. Any question? Any question? All right, so I think in the absence of question, I think this is where we draw the curtain for liquidity, right? So it's left for you to go through the video over and over again, and then you practice, right? You practice. Thanks, everyone. All right, I'm ending the meeting.
Okay, thank you very much for the session, Mas. The recording will be dropped on the group chat for those who will still want to really watch and for those who are not around on the call. So do well to watch it and see you in the next session on Thursday, 10 p.m. Please be active. Thank you all.